Hello and welcome everyone. Good morning and welcome to another episode of the Market Snapshot series. Today we are going to talk about the top market events that are expected to be moving prices this week. And once we do that, we'll do some technical analysis, try to understand the current market structure with a key focus on today's S&P Global Manufacturing and Services PMIs. So good morning, Nyabura Ndongo. Hello, Paul Kerry, and shout out for being the first to join and comment. Hello, Margaret. I can see Dennis in the house, Maureen, Jason, Rono, Robert, and many others who have joined. So let's begin with the economic calendar. So on the economic calendar, we have quite a number of things happening this week, with key focus today being the S&P Global Flash Manufacturing as well as Services PMI. For Australia, we already saw better than expected results this morning at 1 a.m., with manufacturing being up 52.6 compared to the previous reading of 50.4, as well as services being up 51.2 above the previous reading of 50.8, both above 50, which is the midpoint between contraction and expansion. So now we are looking forward to the manufacturing and services PMIs for the Eurozone, as well as for the UK and the US. So for the whole or entire Eurozone, we'll be getting the data at 12 p.m. Then later on, we focus on the UK as well as the US. So as you can see, the projections for the Eurozone, we are expecting a 48.3 for manufacturing and 51.2 for services, both looking to improve from the previous month. So as we all know, manufacturing and services PMI tend to correlate well with the currency. So if they are bigger or higher than expected, then this tends to be positive for the currency. If they are lower or lower than expected, then that tends to be negative for the currency. So for the main mover for the day, we'll be focusing on the US manufacturing as well as services PMIs, which are both above 50 as per the previous reading, where US manufacturing was at 52.7. So we will be expecting 51.9, a bit slower than the previous reading, but still above 50, which shows industry expansion, which will likely correlate with a much stronger dollar. On the other hand, if we get lower than expected, that would be negative for the currency, in this case, negative for the dollar. So it's the same case that applies to Flash Services PMI, which are expected to have slightly improved to 51.2, up from 51.0 in the prior reading. So as for the week, there'll be more focus on CPI or inflation reports from various countries, with the first country to report being Japan. So the Bank of Japan core CPI year over year will be reported at 8 a.m. on Tuesday. This is expected to be around 2.2%. Then fast forward, we'll be getting the housing price index for the US, which is a measure of inflation in the housing sector. In this case, we're expecting a 0.2% increase in the prior month. So then on, we move to CPI in Australia. This will be on Wednesday at 3:30 a.m. In this case, 2.5% was the previous reading. We might be getting a bit of a different data from the previous reading. So clearly, some good movers for the Australian dollar on Wednesday morning. Then for the UK, we're expecting a 2.9% inflation rate, down from 3.0% in the previous reading. So these will be a key mover for GBP pairs on Wednesday in the morning. Then fast forward, we'll get the annual budget release for the UK on Wednesday. The time is still tentative, so we don't know the exact time, but it's around morning hours. So we'll also be getting the weekly crude oil inventories or bi-weekly. Then after that, we focus on the GDP in the US, which will be the main event for US dollar traders. So in this case, we're expecting that the GDP quarter over quarter may have grown by 2.4% in the prior month. So this is compared to the previous reading, which was 2.3%. So we're expecting a slight uptick in US GDP. So later on, we get Tokyo core CPI, which is a measure of inflation in the province of Tokyo, which is the HQ in Japan. So in this case, we don't expect much of a change. So more or less 2.2% as the previous reading was. Then later on, we'll be looking at the GDP in Canada. This will be on Friday at 3:30 p.m. Then the core PCE price index or personal consumption expenditures for the US This is the Fed's favorite measure of inflation. So for US dollar traders, we'll be having two main events. So the first event being the GDP data at 3:30 p.m. on that day. Then the last event will be the core PCE price index. That's 3:30 p.m. on Friday. So outside of that, we know that we've been having quite a number of things moving the market, not just on the calendar, but also from Trump. So in this case, we are already seeing Trump moving the markets. So any update from Trump is more likely to be moving prices this week. So outside of that, we have quite a number of updates. So kind of give me a sec. So the first update we'll be doing is more on the currency side. So since the day started or the new week started, we've had quite a movement in currencies, with the biggest gainer being the Australian dollar, which is up 0.42% compared to the dollar. We have the UK pound, it's up 0.28%, and the euro, which is up 0.26%, and the three being the strongest currencies this morning. Whereas on the losing side, we have the Japanese yen being the main loser, down 0.25%, and the Swiss franc, which hasn't moved much to the dollar, it's down 0.01%, so more or less the same with the dollar. So outside of that, we have more news coming up. First thing to notice is that stocks are really strong this morning. So the stock market today, Dow, S&P 500, Nasdaq futures rise in search for another bounce back week. So far, we are seeing some positive sentiment in stocks, and this has been pretty good since the day started. So US stock futures rose on Sunday as the major indices looked for another week of gains towards the end of a rough month and quarter. So futures attached to the benchmark SP 500 rose 0.7%, with Nasdaq futures being up 0.8%. Futures tied to the Dow Jones Industrial Average were also up 0.6%. So this basically marks a potential entry into a very positive week. So we'll be looking at more recoveries in the equities market. So outside of that, I don't think we have any other major thing happening today on Monday. So clearly, it's only that gold is taking a step backwards, but for the rest of the market, all we are seeing is a positive sentiment. So that being said, let's try to do some technical analysis and understand what we might be expecting for the day. So this is the MetaTrader 5 trading application. It's the app that we use for trading on a laptop and desktop. If you prefer trading using your phone, then you might want to consider the Equity Trader by FXPesa app. It's available on Google Play Store as well as Apple's App Store. So from what we are looking at here, this is the France 40 stock market index. So far, it opened with a gap up and has been moving higher since the market opened. So on the other side, we have the Spanish 35 IBEX, which is a benchmark index that measures the strength of the Spanish stock market. So what we have here is what is looking like a cup and handle. So from the previous high, if you look at the pullback we had and the market recovering, pulling back, and now we are going for a breakout. So it's basically a book pattern for a continuation pattern. So I expect to see more continuation in the bullish momentum, especially after the market breaks into a new all-time high, which is expected to be happening within the hour. So more likely bullishness to be happening after the market close. After the hour close. So the German stock market index is also making a very strong recovery this morning. So we have already seen the market breaking previous highs, especially highs that we saw on Friday, and now we are going for Thursday. So if I was to remove this line, then you can see that there was a straight up bearish momentum happening on Thursday last week, which ended up with further extension on Friday, and now we are looking into a recovery. So from where the momentum started, we could be seeing the market recovering to 23,286 price action level. So for the EU, also we are seeing some good recovery since the market opened. The price action started here. So we could be looking at a market that eventually gets to 5,504. So big opportunities happening on Monday. This is for both silver and gold. So we have had this area here, which was acting as a resistance, but we are seeing the market acting and moving higher. So for silver, this is a potential market break. And if we happen to move higher from this, most likely we'll be going for the open that we saw on Friday. So potentially silver could rally to $33.566 dollars, and this could be happening as of today. So it's the same thing happening with gold. So far, we have had a resistance area and a resistance line just tested this morning. So normally we would expect to see the market hitting this resistance and potentially moving back to the Asian low. However, the market is still pushing and retesting the same particular trend line. So the idea would be, if we happen to break above this trend line, then we move for the high that we saw on Friday. So somewhere around this area here, $3,047 per ounce of gold. So it hasn't played out yet. So the bearish case is still there. But if we happen to break above this particular trend line, then chances are we'll be going for 3,047 level. So as for the dollar index, we had a very strong bullish movement last week with the market recovering from previous lows. So the low that we saw with the dollar index was all the way down around 102.8. So market recovered all the way up, got to 103.8, and now as we start a new week, all we are seeing is more bearish momentum. So with this bearish momentum, we are seeing other currencies take advantage of that. With the euro and the pound, which had given some of their gains back last week, now we are seeing them bouncing. So last week, I remember on Thursday, we talked about the euro USD being the most potential asset to trade, which played out as expected, and we saw the market getting to 1.08250, which looks like our neckline for today. And now the market is bouncing off the same area. So looking at the price action from this morning, we had a positive momentum since the market opened. There was a pullback, then in the Tokyo session, a continuation of the same, and now we are seeing a potential for the market extending the gains and potentially getting to the previous high. So the previous high that we saw on Friday was 1.08622. So expect the market to continue pushing in that direction. So as for the pound, we have already closed the weekend gap and the market continued in that direction. So we are seeing the pound making a very strong recovery. And as for the breakout point, it's somewhere around 1.29686. So that might as well be the target for the day. This is the highest price that we saw on Friday. So given what we saw with the market really attempting to break towards the lower side, if you really zoom out, you'll notice that we are still on a very strong bullish momentum on pound USD. So after last week's pullback on Thursday and Friday, today we are seeing a very strong recovery. So potentially we could be seeing the pound get back to 1.29686 price action level. So for Australian dollar, it's also making an important recovery, being one of the strongest gainers since the market opened today. So good chance that we get to retest Friday's high and potentially break above that. So as for USDN, it has been one currency that has been on a very strong bearish momentum. So as you can see on the weekly chart, this has been a continuous bearish momentum, save for last week. So last week we had a breakout, a pullback to the trend line, and then a bounce. So we talked about this on Thursday, where we discussed the potential of the market bouncing from here and eventually getting to the previous high. So far it has played out well as expected. So with Friday having some very good positive momentum and a continuation towards the end of the day. So today we are seeing the market really struggling for further momentum upwards, but at least we expect a retest of this area, which will be 150.07 price action level. So despite the pullback that we are seeing this morning, there is still good chance that the market continues and gets to the previous high. So as for the Nikkei 25 index, we are seeing the market playing out in a flag. So the flag was to be expected as we continue seeing more recovery in the stock market index. So clearly, with this happening, a breakout would be very good for bullish opportunities. So it hasn't played out yet, but we expect to see some form of breakout here, which would lead us to a previous high that we saw last week. So a potential momentum all the way to 38,134 yen. So as for Brent oil, we had this consolidation area being broken last week. So the market happened to break towards the upper side, and then after breaking, we got into this territory where we don't have much happening since Friday, with the market mainly moving between these two particular trend lines. So they're just shaping up. So we have two highs and two lows determining this momentum. So at some point over this week, we'll be seeing a breakout with more likelihood being to the upside. So good chance that we get a nice rally extending all the way up and getting to $72.535 per barrel. Apologies for that. So on the US equity side, it's a very strong week. We had a very strong ending to last week. Notice how the 4 candlesticks were making a very strong rally last week. So it happened to close on a high, and this week we are seeing the market opening up and pushing even higher. So it has only been positive momentum since the market opened for the US Tech 100, or what we call the Nasdaq 100 index. So clearly some positive momentum. We have already broken above the highs that we saw last week. So now there's good potential that the market pushes even higher, with today's price action projection being around $20,176 per share. So for US30, we're also seeing the same kind of positive momentum. So good chance that we continue seeing even higher prices. So in this case, we are looking at a potential rally towards 42,770. And for the US 500, we're also expecting some further upwards momentum, looking in the direction of the 2 weeks high. So this is not the high that we saw last week. We have already broken above that. So for the previous week, the highest price we saw was 5,764. And now we are seeing the market making progress towards that. So if I had if I had to choose a chart to trade for the day, that would be the Nasdaq 100 index, with more likelihood that we see an extension of this rally, and the market seems not to be stopping. So having broken the prior highs, it's more likely that we continue seeing extended bullish momentum with a target at around 20,176. So that being said, we have the New Zealand USD pair also making some important recovery this morning. So clearly we had the market moving higher and then putting all the way back down. So if there was some form of liquidity grab around this area here, notice that any buyers would have most likely their stop losses around this area. There was a sharp drop, and now we are seeing a very important bounce. So clearly the market could potentially go for the high of the day, and of course we have last week's Friday high. So in this case, a potential momentum trade all the way up to 0.57654. So with that in mind, we'll be checking the comment section for any questions. New week, new opportunities. Thank you, Nyambura Ndongo, for the nice comment. So most promising pair to trade this week, more focused on the Nasdaq recovery. So far I've seen some good recovery happening with Nasdaq from late last week to this morning. So good chance we'll be seeing a continuation of the same. Hello Evans, and thank you for joining the session. So hi Rufus, what happens to a currency when its bank hold rates? So it really depends on the overall direction of that particular central bank, and in what other currency are you comparing that currency with. So in this case, normally if banks are on the verge of cutting rates and they are moving in that direction, if they decide to hold, then that is positive for their currency. But then if they continue cutting rates, then that's negative for the currency. So in the case of last week, majority of the major central banks deciding to hold rates steady, then that means that inflation is still a problem. So their bonds might remain high, and at the same time, also their currencies might remain strong. So the JPY index, in this case, assuming you're talking about the Nikkei 225 index, and with the Nikkei 225 index, I believe we have already covered that. So what we are looking at is a market that is trading in a flag. So if we think of this as one strong bullish momentum, the market entered into a flag, so which is more of a consolidation zone. So at some point we'll be expecting to see a breakout. That breakout hasn't happened yet, but so far the market is making a very strong recovery. So in this case, we'll be observing this area here to see the potential for a break. And once we get a break, then a good chance of a bullish trade towards the previous high. So a good question here, between Audi USD and New Zealand USD, which one is better to trade? I don't think there's a better asset to trade between the two. It's more like which one gives you more opportunity. So if you happen to see an opportunity in Audi USD, then you go for it. If the opportunity is in New Zealand USD, you go for it. But you can't compare the two and say this one is better to trade. It's more like which one presents more opportunities. So good question here. Between French and German PMIs and the overall Euro PMI, which one is going to impact the Euro more? Suppose the French and German PMIs came out mixed. How can we expect the Euro to fare? So Germany is the Europe's giant. It mainly drives the direction of the Euro. So if Germany's PMI was to come out better than expected, then overall there would be an expectation that the whole of Europe would have a positive outcome on the PMIs. So France is a much smaller economy compared to Germany. So if you are looking for a leading indicator into the entire Eurozone, then this would most likely be Germany. So by focusing on Germany, you have a leading indicator on the entire Eurozone. So I believe that's the last question. So thank you guys for the questions. Thank you for your participation. Thank you for liking and subscribing to the channel. And also thank you for sharing the live video. So that being said, remember, we still have a new episode coming up on the Bullish Banter podcast. So make sure to check it out on all platforms, including FXPesa YouTube. So in the last episode, we had Mastering Gold Trading with ICT Concepts and Smart Risk Management with Oscar Tuji. And so far, I believe it has been helpful to the community. So we'll be dropping one more episode this week featuring a very interesting guest. So make sure to keep checking out up on the Bullish Banter podcast. So also, on top of this, we have a new event coming up on the 29th, Love and Money event. So in this case, we'll be focusing on a financially incorrect podcast, and there will be lots to be discovered. So make sure to check out on hints on our social media channels. Tomorrow we'll be having a space talking about it. So make sure to check out the FXPesa Twitter handle, and on the space we'll be having more discussions on the interactions between love and money. So outside of that, if you're just a beginner, make sure to check out the links in the description below. You'll get a link to register for a trading account, download the trading app, and if you're just starting your trading journey, make sure to check out the Novice to Pro course, which is available also on the FXPesa YouTube handle. So that's it for the day. Enjoy a fruitful week.